I believe we had a very good week this week in our trading activities. We made a very good forecast, and I believe we capitalized on some of these forecasts to make money. Welcome to this week edition of NTFX weekly forecast. We're going to start with dollar index, and I did promise that I'll begin to go deep in my analysis so that you can appreciate the application of wave analysis. All right, can appreciate it a great deal. When you understand liquidity, understand inducement, understand trend, and you are able to brilliantly combine it with analysis, you become a better trader. That is how it is, and that is the truth. So welcome, guys. Sit tight and let's enjoy chart analysis together. All right, so today we're going to start with DXY, and the structure that is before us is very clear. You can see that we're in uptrend, and when we look at it together from this level, after right here, the liquidity is cleared, you have a push up, okay? You have a corrective structure here. Let me begin to break it down for you. A, this is B, can you see? And this is C. This is a complete structure for the upside, okay? And right here, you have another break of structure. You have with A, with B. Where is C? C will always break the level of A, okay? This is a regular flat. This is an expanding flat for an upside here. You have another break of structure. Let's analyze. In every impulse, you must have a corrective structure. Every impulse that breaks structure, you must have a corrective structure. So your job as a trader is to analyze this corrective structure and know where you should start from. Right here, you have another impulse, okay? You have another break of structure. There is demand here. Let's analyze how the market will come back to this level. Right here, you have A, B, and C. Okay, this is supposed to proceed to the upside, but no, it's making a corrective structure. A, B, and C. Can you see? So with this DXY, you want after this A, B, this C that is to come down, you want it to come to break this low. Is that okay now? All right. So you see, you want it to come up here, and you want the C to come to the low, A, B, and C. So at the end, you have three wave down, which is called W, three wave up, which is called X, three wave down, which is called Y. So when it gets there, corrective structure for this impulse is complete. So from this level here, you can begin to look for a buy opportunity to the upside. Can you see? So in every impulse, there must be corrective structure. So your job is to analyze the corrective structure that follows. So the better you are as a trader to analyze corrective structure, the better your analysis will be. But if you cannot understand corrective structure and how to pair them together, your analysis will not really make sense. Do you see what we have done? The analysis we have done on this DXY now? So now let me tell you what to do. If you want DXY, you want to trade it to the downside. If going by the kind of setup that we take, if it takes this level here, it means that B with X here is completed after the top is taken. So which means you have liquidity. So from this level, you can look for sell to the downside. And once this downside has taken this liquidity here, break it here, anywhere at this level, you can trade the upside again. Can you now see how we combine liquidity inducement with wave analysis? So you want to see wave structure complete after liquidity has been taken. Is that okay now? So that's what we see about the DXY. So next is euro dollar, guys. Euro dollar. Same thing is applicable to euro dollar. Right here, you see the upside. You see A. Look at this corrective structure here. A, B, and C. From here, we traded the upside. And right here, see what we are seeing. See the corrective structure at the middle. You have A, B, and C, which is wave B. This is wave A here, wave B here, and then you have the wave C here to break this loop. So C here. So from here, we want a move to the upside. Okay? And after this top is taken, we want a drop. Do you see it? Just as we want upside for DXY, you will need downside for euro dollar, but not after you have taken this buy to the upside, and then just like here, not until you have taken this sell to the downside, then the upside. Then this one, after you have taken this sell to the downside, the upside, and then the breakdown again. It's just the opposite of DXY. Okay, so that is what we want to see on euro dollar. But one note of warning I will sound to everyone is that you must have to ensure that there's completion of structure on what do you call it, on 4 hours time frame or the analysis time frame you are using before you jump to entry. So right here you have this B and C. Once this C is complete here, this is the only part of this structure where you can find entry to the upside. Okay, you can't find entry along the line. This is the mistake that many traders make. They understand the analysis, but they are getting their entry at the wrong position. All right, at the wrong position in the market. This is where your entry is. It is not at any part of the structure here. Okay, just let me give you another example so that you can understand what I'm talking about. If you have an impulse here, this is with A, B, and C. This is with B, and then this is with C. You can see that wave C here has completed the structure by taking the level of wave A. You cannot see in any part of this structure, you can't see entry except at this point. This is when the structure is completed. For what? For H4 time frame. And if you go there, if you go to that H4 time frame where structure is complete, you must see impulse and corrective structure. You see the impulse here, you see the corrective structure here. At this point in time, you have what? Entry to the upside. It's as simple as I've just described it for you guys. The reason why you are failing in your trading is because you are getting entry at different parts of the structure. And the actual fact is that you can only get entry at a particular part of the structure. And that is only when the structure is completed. If you are using daily, when daily structure is completed, that is when you can find entry. If you are using H4, when H4 structure is completed, that is when you can find entry. Apart from that, you can't find entry in another part. Any entry you find in the other part of the structure is just meant to deceive you. Okay, it's a 50-50 chance of being correct. So why don't you wait for structure to complete and engage where you have 95 to 99% probability of being correct? That is the only way to be successful in trading. All right, go to gold. I preach this to you and every member of my Telegram community over during the week that we have to move to the upside. We have to go to the upside on gold. And if you see the structure right here, you have taken liquidity. Okay, liquidity is taken here. And after liquidity is taken, you have upside, pull back, upside, pull back, upside. This is the only corrective structure. A, B, and C, which is B, and you have the C. Okay? This is the only part of the structure where you have entry. This is when 4-hour structure is complete. So when I say 4-hour structure is complete, it means that I can see impulse on the 4 hours time frame, and I can see what? Corrective structure. This is the only part where the H4 structure is complete or daily structure is complete, depending on the one you are using or you are familiar with. And this is the only part of the structure where you can see a valid M15 entry or M5 entry, as the case may be. So if you go to this structure now, and you're going to find out whether there is an impulse and corrective structure on M15, you will see that you get one. You're going to get one. You're going to get one. Pay attention to what I tell you guys. Pay attention. All right. You have impulse, you have correction, you have impulse, you have pullback, you have impulse. Okay, this is liquidity graph because this is the level where H4 structure is complete. And then you have this is the leading impulse. Okay, A, B, and C. This is a running flat in the middle, and then you have the C grabbing down. This is where your H15 entry is located, guys. And you can see that it was completed during Tokyo. And then from here, you have a stop loss, and you have boom to the upside. Do you see it now? So now, if at the current level where you have gold, how do you now engage? How do you engage? So you want to see impulse and a corrective structure. Unfortunately, after taking this trade, you have impulse and you have a pullback. We don't trade a pullback. We trade a complete corrective structure. This is just a one move to the downside. Why is it that we don't trade this one move? It's possible you have corrective structure, upside, drop before you go again. So at this point, this is where you now begin to look for what? For entry on the lower time frame. Is that okay now? This is where you begin to look for entry on the lower time frame. You only look for entry when structure is complete. So right here, I couldn't say that I wanted to look for entry here. Why? I only saw a pullback. A pullback can never be equated to a corrective structure. Is that okay now? A pullback can never be equated to a corrective structure. So that was why no entry was sought here. We didn't look for entry here. Okay? We only look for it here when we assume that we had a 4 hours structure complete. So now, what else do we expect here? What we expect is simple. As we have this move, you have this move, we're going to wait until you have corrective structure. So if gold feel it should be proceeding to the upside and it break this structure, fantastic. Give me corrective structure A, B, and C. So when it gives me this corrective structure at this level, I want to look for my entry on a lower time frame, maybe M15, maybe M5, or M30, as the case may be. And from here, I get my impulse correction, I enter to break this top again. Do you understand now? So this is how you look at the market. You see BTC, I made mention of BTC the other time that it has to complete this structure. When BTC was here, you have 3 waves up. Okay, after this down. Let me start from weekly for you so that you can see why I want BTC to proceed to the downside. You have this, you have corrective structure, you have impulse, you have corrective structure. 1, 2, 3, 4. You need to have 5. And this 5 is not breaking this level. It has to break this level to the downside. Okay, so we want it to break this level to the downside so that these waves are equal. All right, but this particular move to the downside is not enough. We expected it to still come down. If it was enough, it would have made a powerful move to the upside. But where is the liquidity that will have made it to be enough? It's not much. So what do we expect? We want it to still push down. Okay, so if you want it to still push down, then it has to develop a corrective structure. After what? An impulse. This is an impulse. This is a corrective structure. 3 waves up, 3 waves down. Then what did I say when we were here? I said my system of trading involves getting my setups in 2 ways. Number 1, if I have an impulse, okay, if I have a 3 waves up, which is wave A, if my wave B make a 3 waves down and break this structure here, all right, if you break this structure here, then I am qualified to look for buy opportunity from here to what? To trade this one to the upside to break this top. Okay, why do we need to break this top? If you break this top here, then you acquire liquidity that you have acquired liquidity that will take this market to the downside. Okay, for the completion of this structure, for the completion of this structure. Is that okay now? But by guideline, it is not compulsory for this particular move here to break the top. It's not compulsory to break the top. You can as well stop here and make a move to the downside. Whereas the other structure is an expanding flat. This one becomes what? A running flat. And from this running flat, from this level, if that level is hit during a high volume session, you can begin to look for impulse, corrective structure to enter to the downside to break this low. I think you can see how we project trading. This is exactly what I wanted us to replicate here. So at this point in time, you have this with A here, you have with B here. This wave B has taken the level of wave A. So I projected expanding flat for BTC, where you have this one come to what? To take this top. Remember, it is not compulsory for you to take that top, but we are just projecting at this moment that it will break that top. So if that is the case, then when you have this impulse here, pullback, impulse, A, B, and C, this was where I made a projection that BTC will move to the upside to break this top. Okay, to break this top. And to also partake in the trade, you could see how I took a brilliant buy opportunity. Remember, I told you that you don't have an entry opportunity until H4 structure is complete. Look at it here. Impulse A, B, and C. H4 structure is complete here. Then I can proceed to my 15 minutes time frame or 5 minutes time frame as the case may be, and then I'm looking for impulse. You see, liquidity is graph impulse A, B, and C, expanding flat. This is your entry. Boom, to the upside. Can you see? This is your entry to the upside. You broke structure, and this is another corrective structure. But unfortunately, this corrective structure didn't go deep. So for that reason, you have to apply the principle of alternation rather, which says that if you have a break of structure and the corrective structure is not deep, allow it to form a break of structure, the next one will be very deep. That is your trade. And the reverse is the case, okay? So right now, you see that we don't have a deep corrective structure here. But right here, you have impulse, and then you have the corrective structure that have gone very deep. So this is your trade to the upside, okay? This is your trade to the upside. I did not take this one, but I took this one, all right? At this point in time, what are you expecting? So you have to take it to like H4 or daily and see what is going on. Can you see that at this point in time, we are at a level where we should be breaking structure. We are supposed to be breaking structure here. A market that is supposed to be strong enough to start breaking structure at resistance is consolidating at that resistance. What does this say to you? What it means is that the market is not strong enough to keep climbing until it makes a bigger corrective structure. That is to say, it does not possess adequate strength to be able to proceed to the upside. So what do we need to do? We now need to see a corrective structure again before we push up. Okay, and if you see a corrective structure before you push up, it means you have seen impulse correction, because without impulse, there can't be correction. This is the level where you will be expecting to see what you saw here. You will replicate it here for a move to the upside. What is the idea behind this move to the upside? You want to break this top. You want to break this top. Okay? To obtain an expanding flat for a move to the upside. I can assure you guys, this move to the downside here is going to come. That move is going to come, and I'm not going to miss it. I'm not going to miss it. It's a question of time. In 1 week or 2 weeks' time, or 3 weeks' time maximum, if the market is slow, we're expected to see this boom to the upside. Okay? Now you have GBP USD. All right, GBP USD, if you look at it on the weekly time frame, you will see clearly that GBP USD is making this structure. This one will go a little, expanding flat, impulse, corrective structure, another impulse to break this low. That's what we are expecting from what do we call it? GBP USD. We still expect it to make a bit of a move to the upside. Okay, wanted to make a move to the upside, and I won't be surprised if I see this structure. Okay, I won't be surprised if I see this structure. I'm going to show you the structure I am anticipating right now. Okay, you know that you have a push to the downside here. Okay, you have the whole of this as a corrective structure, A, B, and C, and then you have A here, you have C here. The whole of this structure become A, B, and C. So this one make a move here. Can you see resemblance? You see this structure here? You see this structure here? You see the resemblance? So that is how it is, guys. That's how it is. So right now, A, B, and C, and the whole of this one is A, the whole of this one is B, the whole of this one is C. Right now, we are at a dilemma to determine where it will stop. Okay, we want to see where it will stop. So if you look at it, it can make a running flat where you can start dropping from here to the downside. Okay, a running flat this way. It will start dropping to the downside. Apart from the fact that it can make a running flat, it can also make an expanding flat for a move to the upside to break this top. Once you break this top, then you have expanding flat, and then this move to the downside. I will support that expanding flat. Okay, I'll be in support of expanding flat so that right here I'll be having this level taken to the upside. Once it's taken to the upside, the fall you will see here will be unimaginable. We'll do it to the downside until we break this low. Okay, that is a liquidity point. Once you break it to the downside, you can now begin to look for buy opportunity. But for this week, all you need to do is very simple. Since we still want a projection to the upside to break that low, so what we do is that right here you have break of structure, you have pullback. This is not corrective structure. You have break of structure. If you have this corrective structure, this one, then fantastic. From here, you can look for buy opportunity to the upside if the structure is completed during the overlap. Then from here, look for buy to the upside. Where's your target? You want to break this top. Is that okay now? So that's how to look for the next setup on GBP USD. Then let's look for AUD USD. If you look at it from weekly time frame, do you notice that this move here never broke this structure? It never broke this structure. So it has not attracted adequate liquidity to make the market move to the upside. So what will happen now is that you might have a pullback here. Okay, you might have a pullback. You know, this one has broken structure, taking liquidity, impulse, pullback, impulse, impulse, pullback, taking inducement. Then you have this to the upside. Okay, you have this to the upside. As soon as this one reaches upside, and it has after this impulse, it has corrected this impulse here. It has corrected it here from this level. It should build to the downside. Okay, that is for AUD USD. Then for US oil, guys, I want to believe if this structure I am seeing here is anything to go by, I want to see this as a possible expanding flat. Okay, so that when you have impulse here, you have to have impulse here. So I would say to some oil exporting countries, if your country is an oil exporting country, my forecast is telling me that the possibility of seeing oil go as deep as 42, 45 is there. Yes, I can see minimum 45. It can go as far as 75. Why do I choose this 75? You have impulse, you have A, B, and C. This is with C of a correction. This will C. So you have A here, B here, C here, like this. So when you have it like this, you now make a move to the upside. Do you understand? So that is how I see US oil analysis. So on 4 hours time frame, since we are still expecting downside, we are still expecting downside on US oil. You have impulse, you have correction, you have impulse A, B. Can you see? C. That's my pattern, guys. That is my pattern. Can you see? Can you see? This US will continue to what? Drop. So can we look for entry? Yes, we can. What the entry we want now is the entry that makes impulse and correction in the direction of our trade. Where is this impulse here? Is it in the direction of the sell trade? No. Where is this impulse here? Is it in the direction of sell trade? No. No. So you have to therefore wait until this buy here that is not part of our sell impulse must go. Any sell you see before this line that generates bullish impulse, any sell impulse you see is not to be considered as an entry criteria because it's still mostly in the buy territory. But do you see this after this one? Upside corrective structure, boom. Do you see this? This is the only one, this is the only sell that is more powerful than this buy. This sell as it is, without a big impulse, without a clean impulse, is better than what you have here. Do you see that the buy here is very smooth and calm? But notice that it's very sluggish because it spent more money, it spent more time developing it. Do you understand? So it's a bit sluggish, and it has taken it's a bit sluggish, but it's better than this one with imbalance. Is that okay now? So that's how you see it. So it's better. So this is impulse. This is a correction, which is not a corrective structure. Okay? Because it's not a corrective structure, we are not going to tamper with it. Can you see? You have this is taken. You have the impulse here is taken, but this is not a corrective structure. Okay. You have another impulse here. This is A. Can you see? You have B. If you can have C this way to break it to the upside, then you can look for sell opportunity from here if it completes against an overlap for a downside. You see now how we cut the wave, how we do the analysis. This is how to do it, stage by stage. When structure is complete on 4 hours time frame, then you can go to 15 minutes time frame or 5 minutes time frame and look for your entry in the direction of the market. So this is the outlook, guys. If you want to know more about wave analysis, you want to know more about inducement, liquidity, and how we combine all these concepts to make forecast. You want to do it by going to our new platform, our new website, our new interface. Okay, our new interface. Go there, brand new interface. Traders Delight. You see it right here. Okay, you see it right here. Can you see? You see the NTFX website. You see the home. You see everything. You see your courses. progress from students. And see, I love this website, guys. I love it. I love it. I love it. Okay, you go to About Us, just explore the website, sign up to it, and you see everything. You see courses, guys. If you want to know how to trade, if you don't want to if you don't want to continue to lose, you must learn the right way. You must learn the right way, guys. So you must learn the right way. So you see our courses divided into two. Don't mind me on this thumbnail. It's not been done correctly to be changed. This is okay with some minor adjustment. But you see trend mastery course. Mastery course is just $200, guys. And you can see the four courses. Okay, four in one, basic course, professional level, advanced technical analysis, and then you have fundamental analysis. Okay, and you can just go for it, guys. You can go for it. And then you also have advanced market forecasting techniques using wave analysis, guys. So you see 3-in-1 course. You have the basic course, advanced market forecasting techniques, wave analysis, and we have the fundamental analysis. These are courses that are well structured, okay, with 9 to 10 years experience in trading. I know what works and what don't work. Okay, so following somebody that know road is never a crime. You have to find a way to do that so that you can profit from this market. If you have been thinking of, forgetting about trading because you are not making money, you are making a mistake. You are making a big mistake because all the effort you have put into it, all the hard works you have put into it, you are just about to lose them. And it does not speak well of you. So I want to encourage you, I want to give you word of encouragement today to keep on pushing hard, to keep on following what we say. At least you join my mentorship community, will give you focus of the market, give you direction of the market, you look for entry at overlap. That I think is good enough for you guys. Okay, so that is it. That's where we're going to drop the cutting for today's forecast. And I believe that by the time we come next week, we are going to come with a better result. So take care of yourself, guys. Make sure you trade the structure that you understand, trade the structure that you know. And if you know that the structure you are seeing before you is not the structure you know, please don't trade it. That is my weapon, guys. I only trade when I understand the structure. And when the structure is not understood, I run away. It doesn't matter if I have to run away for 3 to 4 days. I don't care. My account will be breathing well. Okay, instead of you messing up with your account, please trade what you understand. Trade the structure that you know. And if you do this, I have no doubt that you will make progress in your trading career. So have a lovely week, guys. See you next week. Bye.